Scruff! What you doing?
How's it coming?
What you mucking about with?
I'm not knocking about. I was about to start singing in the rain because it's piddling down out there.
I've got the coffee.
Good girl, because we all know Scruffy likes a coffee. And he does. Saturday morning must be coffee with Scruff. And today's coffee with Scruff is quite interesting because, well, it is. I'm responding to a couple of emails. One of them is first world problems in trading, which you really want to stick about for. But we had another one.
What was that?
And it was from one of your dearest admirers.
Right.
Let's salute Alison there. Want to know how you stay so slim. So come on then, Twiglet. How do you keep your figure?
I don't know. A couple of things.
What do you mean you don't know?
Well, yeah, I do eat healthily. I do like fruit, lots of salads.
She likes a banana.
And I do like to keep active, run around after you all day.
What's the matter with running around after me all day?
Well, I must go up down them stairs about 8-9 times a day.
Well, you get your steps in.
With a coffee?
Well, that's all right. Give it a.
There you go.
Right? Well, that's the right thing. Get your steps in. What's wrong with looking after a man-child? I would say that's a good thing. I look after Lady Bob here. That's why I was fat.
I can shoot him move off your chair.
Because I've got to earn the money. So, what we're going to do is we're going to go up in the office. We're going to discuss first world trading. And what it is, it's about the emotional journey of trading. And it was a fabulous email that I got. And the reason I've come to camera is because it took a lot to digest. But it was about the learning journey. And I'll discuss that because I think it's very, very important. But first of all, come with me. So come with me and we're going to show you something. Because I did promise in the last video that I would show you some of the stupid things that's in this house. So, Winky, let us go into living room.
I know what you're talking about, actually.
Kick it.
No.
Are yous?
No.
Are yous?
No.
Right. When you kind of come round into here, right?
No, the doors.
We don't have door stops, right? We have them. Pick it up and drop it on the floor.
It's not that heavy. Not that one.
Well, that one isn't, but the one that I kicked.
The dog is heavy.
We'll come down here into. I'll get bollocks there because I always put my coffee cup on there, and then she kicks off.
I'll
she
need
doesn't
to
like.
ring.
Shut up, you. Right. What we do have is that thing. Right. That's our door stop. Watch this.
Hey.
Did you hear that? When that thing hits your foot, you know about it.
Well, it's not for your foot, is it? You shouldn't be kicking things.
Well, you bend over and I'll show you something for me foot. And we got another one here.
You've got some more upstairs. You've got a duck and a gonk.
We've got a gonk, all right.
In the bathroom.
It's standing next to us. Right, let's go up in the office. The sun has got his hat on, hip 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 hooray. The sun has got his hat on and he's coming out to play. Oh. I wish, oh God. What?
You got something, but you have a pit stop halfway up.
I did. I needed a rest.
This is how I don't put weight on up and down the steps running after you.
Well, what more do you want? Don't see any bickies about.
That means I'm going to walk downstairs. What, you had a biscuit?
No, I'm watching me figure.
Oh, there's the one.
I want that.
What?
Who the hell wants to eat that?
They're nice, they're healthy.
So is a Mars bar and a Kit Kat.
Oh, Kit Kat, eh?
Yeah, helps you work, rest and play. Do you want to play?
Yeah.
There, well, your cock's up there.
Oh, dear, you are disgusting. I'll get you a biscuit.
Okay, boys and girls. Have all the freeloaders gone yet? Hope so. For those of you who've never been on this channel before, none of these are really scripted. It's basically me and Wink and our life. Anybody who's been out with us, what you see on the camera is what you get when we're in the pub. We're just the same. But also this industry, it attracts the needy, the greedy, and sometimes the damn right awful. So an easy way to filter them out is not to give them a reason to stay. If they're not getting anything, they disappear straight away at the beginning of the videos. And I know that's contrary to what you should do as a YouTuber to make your channel grow, because you're supposed to have retention and all of this. I don't give a shit. I really don't. I do this for my own enjoyment, but I also do it to help people who are really interested in the job. If you're a gambler, you fail before you start, and I don't particularly want to know you. And this will come across quite a lot. Now, in the little squad that I run in the Discord, there are people who like me. There are people who dislike me. Oh, wow. Do you like me?
Yeah.
Do. Oh, I love you.
Oh.
I do. Do you love me?
Uh-huh.
Do.
Yeah.
When?
All the time.
Do. I'm going to pause this now. We're going to have a little interlude.
I'll see you later.
All right, sweetheart. I'll see you in a bit tonight.
Yeah, I'll see Dad.
Yeah, go on. So, but why don't they like me? Well, they don't like me because I tell them the way it really is. I can see a gambler a mile off, you know. And I've got little time for that gambling mentality because it will naturally drag down the rest of the group. Oh, look at me, I'm amazing. And you can see it straight away. Friday afternoons, Monday mornings. If you dive in at the charts at those times, what it is, it's your desire to trade is outweighing your reason to trade. Now, once you've got your reason, you shouldn't be in the markets that much at all. You should be in the markets when you need to be to achieve your goals. And you think, well, I can't achieve my goals unless I'm in the markets. Wrong. Planning. Like yesterday. I don't trade on a Friday. I really don't.
Fuck no!
But I can plan on a Friday for the rest of the week. So I'm using the time effectively. Now, this coffee with Scruff, and normally coffee with Scruff is just me and my thoughts through a week, is going to be around the world of first world problems. So I had an email off Emma. So let's flick this over. And there we go. First world problems by Emma. Little salute to you. Now, in this email, it was a lovely email. And it was touching on the journey of trading, doing quite well, have a bit of a hit, climb your way back up the mountain again, then get to a half decent point, you feel comfortable, but then the emotions kick in, and all these different things that happen. Well, what happens is you have to experience the emotional roller coaster. And I genuinely believe that in order to grow, you have to have some little bits of pain. Now, I've been through it myself. I've lost thousands of pounds over the years. Thousands and thousands. And my education has cost a fortune if I add in how much I've spent on going to seminars and sort of courses and things, because I used to go to banking seminars. How much I've put into wages because I had a guy working for me. Losses, etc. And the sum is colossal. It's absolutely colossal. But it's paid off. So it's no different than going to a university and spending thousands of pounds on a degree. So these are first world problems. It's not out of necessity, it's out of getting better. Now, when you hit a big loss, you shouldn't be worried by it. You know, I was asked in the comments, have I lost accounts, whether it be prop or my own? Yeah, I've lost loads, you know. And it's all part and parcel of the learning process. With prop, you can do burnout. Now, a burnout is literally where it's return on investment, knowing it's going to blow eventually and it's not going to be there forever. So what you would do in that scenario is you pay your £100 or 40 quid, 200, whatever it costs to get into your prop. And you're looking just to get that money back. And then anything you get beyond that is 100% return on investment. So for argument's sake, you pay £200 on your fund. Your first payout gives you 250. Well, you've got your 200 quid back, so you can buy another one if you want to. But you're also got 50 quid profit. Now, any other sort of payouts thereafter are 100% profit. So that happens all the time. You can then also look at it where I'm going to do slow and steady, but you look at the similar principle of I get my money back and then it's just profits going forward. Now your live account is exactly the same, but it depends on how you want to look at this. And this is where I talk about the reason to trade. Now, if you just want a holiday, and you've seen me do this, have an account that is just for a holiday. You know, how much do I want out of that holiday? I don't know, it could be £1,000, £2,000. Break it down to its smallest denominator on a daily basis from the day you're going to start to the day you want to pay for it. And that'll tell you how much you need to do per day. And then once you've achieved it, shut it down and move on to something else.
I'd buy that for $1.
That's a good way of trading because it's methodical. You've got a reason, you've got a target, and you're working towards it sensibly. Now, what happens is, let's just take the £1,000 for an example. And you might be doing it at £10 a day. Well, you could do that in one trade. So why would you go back to market? Why would you do it twice? Well, you wouldn't. Because now you've put whatever you've made at risk. Also treat every day as a day. This is today. This is all I'm doing. And if you do it that way, what you find is it becomes very, very easy. Now, I use what's called a ring fencing principle. Now, I start at the beginning of each month with a set amount of money for my wages. And this goes on to something else that was mentioned. It was about if you're holding a lot of money in your account, it's dead money. It's not making any interest. Well, it is, because you're meant to trade that manually to grow. So if you start with £1,000 and you end the month with 1,100, that £1,000 has grown by £100. That's the interest. There's not many banks will give you that. Okay. Now, if you can't beat the bank, in other words, sort of look at what the bank rates are, why are you trading it anyway? Isn't it better just to put the money in the bank, let the bank do the work, and that's it? But as a trader, you should be growing your balance. So I don't necessarily look at that way. But what I do look at is myself. And what I mean by that is, well, let's just say I've got 100,000 quid to play with. I ain't putting that in a broker. I'll put in what I need to put in. £1,000, 25 grand, something like that. So that 25,000 is working for me in the sense it's generating my wage, or it's generating the growth that I put into it. The other 75,000, well, that's backup money, and that'll be in an investment account, and that'll earn interest passively in the background, but it's only there to be used if I need to it. Now, the initial 25,000, if I grow that up to say 35,000 in profit, I might take 4,000 for a salary. Well, that means I've got surplus 1,000. I'll put that over in the investment fund, and then that'll grow on its own. And then I start again at the start of the next month with 25 grand and move forward. Now, that's just sort of figures to sort of keep it easy, but that's kind of how I do things, you know. Now, I just want to touch a minute or two on sort of the statement of the desire to trade should never outweigh the reason. You see, in business, everything should be planned, ring-fenced. You've got so much for this, so much for that. But when the clock's finished at the end of the day, you have to have time to rest. Now, most people who come into trading think the longer I'm sitting at the chart, the more money I'm going to make. No, that's not necessarily true. You can't concentrate that long. So once, twice a day, pretty good. That's what I do. You know, tend to look at trade once in the morning, once in an afternoon. But if I'm paid enough, I won't go back to market, because that's my desire taking over the reason. The reason is the daily amount that I come to, and it's derived from something that is realistic. So if you want a salary, and you've heard me say this many times, my base salary is £30,000 a year, right, for my wage account. You know, do a little bit better than that, and then I've got other accounts around it, but I base it on 30,000. Now, this is how I get to it. 30,000 is enough to pay my food bills, put clothes on my back. Maybe he's giving me a holiday if I want to, but it's basically the running of the house, okay? Because I've got no mortgage, I've got no debt. So 30,000 is quite a reasonable sum of money to just live. You know, it's why you see me go out for dinner quite a lot and things like that, because I've worked hard to get to this point. Now, I know I can't get every trade right, and I'm not going to win every single day, but I've got a very, very good hit rate, right? So I work it on 48 weeks of the year. I'm going to have time off, and I'm going to be wrong. So that gives me a buffer zone. Right. Well, I told you I don't like working Mondays, and it's foolhardy to trade on a Friday. So essentially I'm doing it in 3 days a week. Well, if I do £200, 3 days a week, that's 600 quid a week, across 48 weeks is just on 30,000. So I've got a parameter. I know what it is that I'm after. Now, if I trade twice a day and I'm on a basic fiver a point, well, that's 2 20 pip moves. On the DAX, that's a piece of piss. It's easy, if I'm patient. Now, sometimes it moves against me, so I can add into that trade and still end up with 200 quid. You know, so what I'll do is I'll dip my toe in the water and I'll gradually move in. Now, once I've got surplus, I'll farm it over into something else, which gives me extra treats. And that's it. That's how I built my accounts. Use one account to pay a certain set of criteria, wage. If I've got surplus, it goes over into investment, which can build up, help buy a car or buy a holiday, or I'm in the process of setting another one up for buying a house, because Joanne's decided that we're going to move. So over the course of the next 18 months to 2 years, I want to try and get to 100,000 in an account. But my first rule is I'm going to break it down to get to 50,000. So over the next 18 months, I want 50 grand in an account, and then I'll build it up thereon. Okay, so that's my goals. It's what I'm essentially doing. Now, can I do it? Yeah, it's going to be tough, but I can do it. But now I've got a plan. I've got a reason. What I'm not going to do is put that reason at jeopardy by having my desire to trade take it away. And what that means is overtrading and gambling.
They've done studies, 60% of the time it works every time.
That doesn't make sense.
So I don't oversize, I don't overtrade, and I plan out every single day and every single trade. Most of you don't do that. Most of you just switch the computer on and go, well, I'm here, where's me trade?
It now.
And then you'll start going at it like a machine gun, searching for any trade that'll have you, and then cry about it when you get it wrong. Whereas if you'd waited an hour, actually put a bit of thought and a bit of planning into it, you'd have been paid. Because the amount of times I get an email of someone saying, oh, well, I closed it out and then it ran off the target. Well, you didn't plan it in the first place. Oh, I saw this move and I dived in and it went wrong. Well, just because you saw a move doesn't mean you know what it's up to. You can have a Kylie retracement inside a trend. You go with the trend. You don't try and counter it, because inevitably what happens is it starts pulling back into the retracement. You think, yes, off we go. I've got this. It's going to run because it happens all the time. Hold on a second here. This isn't quite going to plan. No, because you don't know when it's going to turn. The market will constantly revert its way back to trend. The retracement is profit taking, people being wrong, pausing positions, but the majority will always take over. You know, these are the old sayings. Trend is your friend till the bend at the end. That's the bit that people forget. Now, there's certain things that can tell you where the bend at the end is. Bollinger Band can tell you, because it tells you the strength of the market. It'll tell you when it's weakening as well. Now, an RSI can tell you the momentum of the market, but it's actually short-term momentum. So what it can actually do when it's going up in a downward trend, well, that's a good thing. Doesn't mean you say the market's going up. It's just telling you it's relaxing. So what you're doing is you're playing a game of opposites. Simple thing. And there ain't no 15-minute video going to teach you that. And let's be honest, if you think you're getting a 6-figure salary by watching a 15-minute video, or you come in and you watch a couple of modules, you're delusional. It takes a long time to learn this job, like it does any job. Willing to put the work in, you'll get there. But my advice is very simple. You've got to know where you are in the journey. If you're just beginning, you are not getting a wage from this. You're learning, you're going to get battered, and you're going to take losses. Now, those losses will kind of teach you what works, what doesn't work. Then you're going to get reasonably good at this. Excuse me. Reasonably good at this. And you're going to make a bit of money. Then your emotional side will kick in. And the emotional side will tell you you're invincible, because you've just been going through the process and you've made a bit of money. Well, that emotion will now tell you to oversize. Certainly tell you to overtrade. Trading on a Friday afternoon. Idiot. Don't talk to me. I'm not interested in you, because you're not trading, you're a clown.
A clown.
Mm-hmm.
You're taking on the market at the worst possible time, and it will bite you in the arse. And that's what we're looking for in this part of your journey, because you're going to do it, and you're going to take a trade on a Friday, and you're going to win a few, but then you're going to lose, and that loss will be the biggest loss you've ever had, because if you hold that through the weekend, one, anxiety across all of the weekend, because you've got an open position. You've got no idea which way the market's going to go on Sunday night, because you've got all the pre-markets. Anything could happen between close of Friday and opening of Sunday. When open comes, the spreads are humongous. Take pound JPY, for example. Late night spread, 5, 6, maybe 18 pips. Sunday night, 40 to 50. You've got a stop in place, that's just gone. You've been taken out of the equation. You haven't got a stop in place, it ain't going to do you take profit. So that means you're going to have to carry that into Monday morning. Monday morning, wild card. Don't know which way the money flow is going. And as with Sod's Law, it doesn't go in your favour. It'll go the opposite way, and it'll burn the account out. Why? Because you were trying to be Billy Big Bollocks on a Friday afternoon and showing off to your mates, when really you should have been in the pub enjoying a chat with your mates. Now, I know these are bitter pills to swallow, but you need to go through them. And I've been through it, which is why I'm telling you. I'll take Monday, I'll go with trading on a Monday, but trading on a Friday afternoon is for the fucking idiots. All right? But it'll teach you the best lesson going. Humility. Because the market will humble you in a heartbeat. Now, once you've been through it, and it's taken all that money from you, you then start understanding that the desire to trade should never outweigh the reason to trade. And that's what this monologue was all about. It's really, a lot of people that get excited by trading and they're just looking at the money all the time. waste of time. You know, if you're chasing money, go down the bookies. The money will come naturally. Why? As your account gets bigger, your position sizes get bigger. But keep the position size in relation to the account size. And it will naturally grow. And eventually you'll get to a point. And believe it or not, you can start relatively small. And it only takes maybe a year of building to get a pot that'll start paying you. But if you just switch the machine on and expect it to be done in a week, it's not going to pay you. In fact, it'll take the money off you. And once you've learned that lesson, then you grow. And that's first world problems. Anyway, thoughts of an old man on a Saturday morning. Should we drop some money into the Vanguard? Like start this off? Kind of back up a little bit what I'm saying. Do you know what? I think I will. There's not many who'll actually show a true bank account. Not many at all. So I think that's what we'll do. Let me just switch the Vanguard on. I'm going to open up a pot, a separate pot. Not as part of the ISAs or pension, just as a standard trading account. Because keep it in there for about a year. As long as I keep half an eye on it, I should be able to get some half decent interest out of it. And what I'll also do is, it'll show you that I'll put money where my mouth is. Now, I'll be dropping 10, 14 grand over into that account. And it's real money. Let's do that right now.
Well, we're waiting.
Okay, so what I've done is I've got a separate Vanguard here that I've put onto this portfolio. So basically I've got a pension fund, I've got an ISA fund, and I've got a standard fund that I'm just going to call retirement house. Now, the ISA part of it is pretty much nearly filled up, but it's part of my trading funds. The pension's the other side of it. The retirement house I'm keeping completely separate. I'll just pay the tax on it, because if it was in a savings account, I'll pay the tax on it anyway. And it's not that bad. So £1,000 worth of interest across on the savings account is tax free, so I can take advantage of that. And what we're going to do is now we're going to top up that fund. Well, let me just top the whole sheet up actually, because it's actually dropped. We were doing okay, but not so much now. So it's 45,796, and on the other side I've got 103,233.72. Okay, so I track it on this, as you can see. So we were over the 150,000, but it's dropped back. The balance that I had in a bank account, which you see the other videos, we start with 10 grand. I was putting money in. We're now just going to put it in this investment. So when I finish, it'll be 14,248.83. Okay. So what we need to do is put 14 grand in here. Okay. And I've put the wrong figure in somewhere. 45,700. No, it's right. Sorry. Because the portfolio will take into account what I'm putting in here as well. All right. So what we're going to do is we're going to look at this. We're going to top up this investment here. So we're going to top that up. Next available price. And we'll do 14 grand. All right. 14,000 we're going to put into it. Now, it will ask me to put my bank details in, etc., etc., which is what I'm going to do. Will be a debit card. So let me pause the camera now while I do that. Okay, so that's kind of going through now. It'll ask me for a code, so I'll have to pause again, I would imagine, because it's a reasonable sum of money. If it doesn't, well, we'll sharp find out. Come on, yeah, it's asking me for, so I'm gonna have to put in a code. Give me a second. Okay, so that's going through. There you are, that's paid. What we'll see is that will be in cash now, I would imagine. 14,000 in cash. So if we come down into retirement house, we'll be able to see it. There it is there. Okay, so that portfolio now has the 14,000. It'll buy that at the next available price, and away we go. So there we go. That's me putting my money where my mouth is. Don't think there's many would do that. Real bank account, real payment. Now all I'll do now is just sit on that, and I'll just keep adding into it and adding into it over the course of the next year or so, and hopefully it'll generate a little bit better than what the banks will give me. Now at the moment, banks aren't really doing a lot for me. You know, best you can get is about 4%. Well, with luck, I might be able to get that up to about 10%. If I can get it to 10%, I'll cash it out and then I'll put it back into a bank account, simply because it would have paid me a damn sight more than if I'd left it. Something along them lines anyway. I don't know. I'll run it through till April, and then I'll make a decision as to what I'm going to do with that money thereafter. But in the meantime, I'm just going to keep putting money into it. And that'll be it. So there you go. Not really sure where else to go, but if you're looking at first world problems, one part of it I will say is, it takes money to make money. And if you haven't got the money, you've got to do little steps. If you swing at the fence, you'll go boom and bust all the time. But little steps, think hare and tortoise, you'll get there. And then when you've got something that's half decent, just cultivate it and farm it into other things. Hope that helps. Catch you soon.